Welcome to our comprehensive AUD/CAD analysis report covering October 13th through 18th, 2025. In this presentation, we'll dive deep into the technical analysis, fundamental developments, and trading opportunities for this commodity currency pair. We've gathered data from multiple authoritative sources including TradingView, Investing Live, Action Forex, and Reuters to provide you with a complete market picture. Whether you're a range trader or looking for breakout opportunities, this analysis will equip you with the insights you need. We'll examine current price action, key support and resistance levels, central bank policy shifts from both the Reserve Bank of Australia and Bank Canada, and provide actionable trading strategies. Let's get started with our data-driven analysis prepared on October 20th, 2025. Let's examine the current market snapshot from TradingView as of October 20th at 7:03 GMT. AUD CAD is trading at 0.91103 Canadian dollars, showing a modest daily gain of 0.00025 or 0.03%. The pair opened at 0.91010 from a previous close of 0.91078. Today's trading range spans from 0.90984 to 0.91255 with volume at 7.77 thousand ticks. The technical indicators paint a neutral picture across the board. Oscillators are showing neutral readings, moving averages are neutral, and the overall summary is neutral. This suggests the pair is currently in a consolidation phase with minimal directional bias in the short term. Traders should watch for a catalyst to break this equilibrium, which could come from upcoming economic data or central bank announcements from either Australia or Canada. Analyzing performance across multiple timeframes reveals interesting patterns. On the very short term, we see minimal movement with 1 day up 0.02% and 5 days up just 0.01%. Confirming the consolidation pattern. The 1-month performance shows a slight decline of 0.20%. However, zooming out to 6 months reveals strong positive momentum with a gain of 3.61%. Year-to-date performance remains positive at 2.35%, though the 1-year view shows a slight negative trend of minus 1.38%. The key insights here are clear. Short-term traders face a consolidation pattern with limited movement. Medium-term traders have enjoyed strong positive momentum over the past 6 months, and long-term holders are experiencing a slight negative trend over the past year. This divergence across timeframes creates both challenges and opportunities depending on your trading horizon. The Investing Live multi-timeframe analysis reveals a fascinating divergence between short-term and long-term signals. On the 30-minute chart, we see a strong sell signal, while the hourly and 5-hour charts both show neutral readings. The daily chart indicates a sell signal. However, here's where it gets interesting. The weekly time frame shows a strong buy signal, and the monthly time frame also displays a strong buy signal. The technical indicators breakdown shows 3 buy signals, 5 neutral signals, and 2 sell signals. Moving averages paint a different picture with a strong sell rating, showing 1 buy signal versus 11 sell signals. The interpretation is clear. Short-term weakness contrasts sharply with strong, longer-term bullish structure. This suggests the current pullback or consolidation may be a temporary pause within a larger uptrend, presenting potential buying opportunities for patient traders. Understanding key support and resistance levels is crucial for effective trading. Starting from the top, we have 3 resistance levels. Third resistance at 0.91910, second resistance at 0.91557, and first resistance at 0.91320. The current price sits at 0.91086 Canadian dollars, positioned between the first support and first resistance levels. Below current price, we have first support at 0.90730, second support at 0.90377, and third support at 0.90140. 2 critical zones deserve special attention. The support zone ranging from 0.9037 to 0.9073, and the resistance zone from 0.9037 to 0.9073, 0.9132 to 0.9191. The trading implication is significant. Price is currently hovering between first support and first resistance, suggesting a potential breakout in either direction. Traders should watch these levels closely, as a decisive break above resistance or below support could signal the next major move for this pair. Australian economic developments during October 13th through 18th significantly impacted the Australian dollar. The most important event was the jobs data released on October 17th. The unemployment rate rose to 4.5%, its highest level in nearly 4 years, while employment increased by only 14,900 jobs, falling short of the 20,000 forecast. The market impact was immediate, with AUD falling below 65 cents. This data dramatically shifted RBA rate cut expectations. Before the data release, markets priced in a 40% chance of a rate cut. After the release, that probability jumped to 71%, with markets now pricing in potential easing as early as November 2025. Earlier in week, the RBA policy minutes released on October 15th showed the cash rate held at 3.6% with no urgency for additional cuts. However, the weak jobs data appears to have changed the calculus. Additionally, U.S.-China trade tensions pushed AUD to a one-month low on October 15th. Canadian economic developments during this period also played a crucial role. Bank of Canada, Governor Tiff Macklem's comments on October 17th were particularly noteworthy. He emphasized the need to be humble in economic forecasting due to persistent trade uncertainty. The next rate decision is scheduled for October 29th, with markets expecting a 25 basis point rate cut. The Canadian dollar's performance was weak, posting its fourth consecutive weekly decline with a 0.1% drop for the week. USD/CAD is now trading above the key 1.4000 level, showing a strong bullish bias for the US dollar against the Canadian dollar. Oil prices significantly impacted CAD strength, hitting a 5-month low on October 16th. Since Canada is a major oil exporter, subdued oil prices directly weaken support for the Canadian dollar. Trade tensions with the United States continue to take a toll on the Canadian economy, with safe haven demand benefiting the US dollar over the Canadian dollar. Let's examine the trading range outlook for both short-term and mid-term horizons. For the short term, covering 1 to 4 weeks, the range is 0.9060 to 0.9240. Current position is mid-range at 0.9110, with a bias that's neutral to slightly bearish. The key level to watch is 0.9060 support. For the midterm, spanning 1 to 3 months, the range expands to 0.8880 to 0.9240. The pair is trading in a rising channel with an outlook of continued consolidation before a potential breakout. Critical resistance sits at 0.9240, the monthly high. Barchart's technical rating shows 80% buy, indicating a strong buy signal, though short-term momentum is weakening while long-term indicators support trend continuation. For trading strategies, range traders should consider buying at the 0.9060 to 0.9073 support zone and selling at the 0.9190 to 0.9240 resistance zone. Breakout traders should watch for a break above 0.9240, which could target 0.9400 or higher, or a break below 0.9060, which may target 0.8880. Let's synthesize our analysis with key takeaways and trading recommendations. From a fundamental perspective, 3 drivers dominate: Australian weakness from soft jobs, data is increasing RBA rate cut probability to 71%. Canadian weakness stems from the Bank of Canada's dovish stance, combined with oil price pressure. The relative weakness in both currencies is creating range-bound behavior. Technically, the short-term outlook is neutral to bearish with ongoing consolidation. The medium term maintains a bullish structure, while the long term shows a positive trend channel. Key events to watch include Australia's Q3 CPI data due at the end of October, the Bank of Canada rate decision on October 29th, U.S.-China trade developments, and oil price movements. For trading recommendations, range traders should buy at the 0.9060 to 0.9073 support zone and sell at 0.9190 to 0.9240 resistance. Breakout traders should watch for moves above 0.9240 or below 0.9060. In conclusion, AUD CAD remains in consolidation with balanced fundamental pressures. A breakout is likely in the coming weeks, with direction dependent on upcoming economic data and central bank decisions.